All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's been open here for about an hour. It's fairly bearish out there. It's fairly bearish. It's one where Google set the tone for the bears at the close yesterday after earnings. We have seen earnings from other companies come in this morning. Some of them a little bit better than what their price action is, but overall, we're just seeing this kind of just general pullback. A lot more participation on the downside than what we've seen participation-wise on the upside. We talked about that yesterday, this kind of participation rate in the market. But we'll go out and take a look at a little bit of it here in just a moment. But let's go challenge here. And GM gapped down on its earnings. It's down $1. It was down 60 cents. It was down $1.50. But none of that matters. I don't have to make a decision. I just have to go out and execute here. The June 40s are going for, 73 cents here. So going to pop these off at 73 cents, 0.73. And the weeklies, which will get hit dramatically or significantly more, 33 to 30. 30 is going to be the exit price there. And let's back that out, 0.30. Okay. All right. So this is kind of how it sits here, and kind of where things are here with it. But this is the last trade I'm making in this test basket. I mentioned yesterday we're going to start and we're going to go and take this live here next week. And that will be on the 9th. So very much looking forward to that. In the meantime, have some things to talk about with this. Have some things to, still a couple more questions to clear up as far as it goes. But, this test, it wasn't a test for the algorithm, wasn't a test for, most of the functionality. It was simply a test to do two things. Number one, take a look at option pricing, applying the correct option. And, I mentioned when it started, I pretty much know where it's going to go, but I'd like to just kind of show that after 4, 5, 6, 7 trades. And so it's very clear where the sustainable basket is, what is unsustainable, and, where better reward is, where more risk is. All those things are very easy to see here with this test. But it brought a couple other things to light that do want to address. And then the second thing with the test is to answer the questions from the community. Things that this is just a little bit different. So kind of what type of questions, what type of clarifications are needed, what type of explanations are needed here. But this will be the last trade for the test. There's no trigger here this morning, so not going to make another trade. But this is the last trade for the test here. Now, when this goes live, there's going to be a couple changes, and you're going to hear me talk about these a couple times before we go live. But I thought I'd kind of run down with you here just some of the basic changes that are happening. Number one, the ATR method. Okay, the exit method here. This 3 days without triggering step 1 or 2 equals an exit. That's going to stay the same if the option is red. If the option is red, 3 days, done, move out, right? Like Alibaba, right? It took about a $50 loss. It was slightly red. 3 days, still red, going and leaving. But going to up it to 5 days if it's green. Now, if during that period it turns red, it will be exited. Okay. What does this allow for? It just allows for a little bit more time, to let things go. And since we are doing the longer term options, another couple days isn't going to hurt anything. And so going to make that small change here with it. Again, none of these changes are monster, but 3 days red, 5 day green, basically on that. Also going to take out this market vibe signals, this 1,000 dedicated to the market vibe signals. And, decided that what I'll do is I'll put SPY in the watch list for the algorithm and trade SPY around the algorithm. I went back and I looked at every time we see the market vibe change and go from bearish to bullish or bullish to bearish. And 70%, around 70% of those times, there were like 22 times in the last several years. And what was it? Something like 14 of those, 13 of those, somewhere in that area. I don't have the data in front of me. But the SPY actually triggered with the algorithm as well. So I think I'm just going to, for simplicity's sake, take that out. Yep, SPY will be on the watch list. We'll trade SPY when it happens and go. But take that part out, and more for a simplification standpoint. Change number 3, GM is gone. GM is no longer on the watch list. It is banished, banished forever. All the autos are banished. And it is not part of the watch list anymore. And moving on from that. Now, it was funny because after I did GM for the test basket yesterday, my brother called me and he goes, "Really?" And I chuckled, and I sent him over the data. GM has been one of the absolute best stocks with the algorithm. It has been one of the best performers up and down. It has been phenomenal. But I can't explain something when it comes to GM. The last 5 times I've traded it live on Trader Minute. Okay, not the last 5 times I've traded it live, because I've traded it many other times and done very well with it. But the last 5 times I've done it live on Trader Minute, the next day, within 24 hours, the stock has gone 3% against me or more. I couldn't do that if I tried. I know I didn't make the trade live here today, but GM, 3% against me here today. Yeah. At some point, I'm not one that's big on, the universe speaking or, that type of a thing. But at some point, okay, enough's enough. Got the message. GM, done. Right? So GM's coming out of the watch list there. And, bye-bye with that. And there will not be any autos in this, in the basket here. The other change, no earnings trades until the challenge hits 10K. And it's not going to matter all that much for the upcoming challenge, because it's, most of the earnings on the companies that have, the companies in the basket here, most of these companies will have reported earnings. We've heard from J&J and Altria, and we've heard from Chevron, from Disney and FCX. We've heard from Micron, and the earnings will roll back around, but until it hits 10K, we'll not hold anything over earnings. So we'll trade it. Let's just say, hey, let's say I get a signal and it has earnings in 3 days. I'll still trade it, but I will be out before the earnings happen, and that's just to take away some of the variability, right? Just some of the variability, and I will do it when when the challenge hits 10K. We'll add earnings, and say, hey, who cares about earnings there? But going to make that slight change. Another slight change. We'll expand the watch list a little bit. Going to add about 10 new stocks here to the watch list and up this to about 60. This is just something, in terms of number of triggers, right? It's not because, these 10 stocks are something, different or special or something like that. It's just to up the trigger rate here a little bit. And then the last change will be the timing of the afternoon trade. Instead of 3 o'clock Eastern, will be 2:30 Eastern, so 30 minutes earlier. And this is something where if I change the morning entry by 30 minutes, there's a strong variance in the data. And that's not what we want. In the afternoon, if we change it by 30 minutes one way or the other, the data doesn't change very much. We don't see different signals come in. We don't see new signals. The only exception is on Fed days, really. That's the only time we see a big exception there. But going to make that just slightly earlier, and that's just for, convenience of the community. and a little bit more time going into the close. So those are the changes that will be made. Nothing too dramatic, nothing too drastic, and we'll get this up and rolling live. I will be making all trades live on Thinkorswim. The alerts will be sent out live, in real time via Twitter, email, text. So just what you come to expect there with it. I won't discuss the trades in depth and detail because my in depth or detail analysis doesn't quite matter when it comes down to this. What matters is the ultimate performance here over time. And that's what I'll be looking for. But you will see me, especially here in the month of May. We're going to do the kind of 30 days, 30 indicators, and I know there are not 30 trading days in the month of May, but we still will do 30 indicators during the month of May. And talk about, some of the different technical indicators. I will discuss every single technical indicator that's in the algorithm. Now, there are some things in the algorithm that aren't really technical indicators because they're kind of machine learning elements. They're taking back history and going, okay, when this has happened in the past, what has been the performance rate on this specific action? So it's not exactly something that I can pull up on a stock chart and have this indicator show something. But I'll show you some of the indicators that kind of do something similar, to where you'll be able to kind of piece together and be able to kind of understand and say, you know what, chances are very high that this stock triggers, and maybe a little lower that this stock triggers. Here, and have a decent understanding of that, here yourself. So we'll be doing that here during the month of May, and then here between now and when the new challenge starts, as trade setups come in, I will jump on. I will talk about them. Anything I trade live personally, I'll jump in and show and talk about. I've been fairly light, from a personal standpoint. The last big trade I made was FedEx, and I bought some weeklies and I bought some monthlies. The weeklies, they expired on Friday nicely, so I cashed those out. I still have the monthly puts on it, and I'm not in a heck of a whole lot. I have been looking to bottom pick a little bit here with GOLD, but haven't found the right entry point here with it. But as I go and jump into things, I'll show you, what I get into and, the rationale behind those things. Now, Alibaba could easily trigger on the algorithm today if it were to end over 188. And it tried to kind of push up into that level. In fact, it pushed to 188.25, then sold on off here. But, I'll show you I'll show you the stocks that are triggering on the algorithm there as we go forward here. Okay. Later this week, I'm going to do a video that is going to be added to the website, the front page of the website, and it's going to talk about the 100K journey. I'm going to talk about the 100K challenge from its inception to where it is today, and to where it is going. And I will talk about the highs, the lows, the changes, the alterations, the reasoning behind a lot of it, and the expectations as we go forward. And it is something that I take very seriously. And I know the challenge is kind of a game, but let's face it, we're in the challenge to make money. And some of the recent challenges have struggled in that regard, and I'm making the changes that I'm making, to change that. But do want to kind of talk about it, talk about the mentality of it all. I've shared bits and bobs, but we'll discuss the entirety of it as well as the future of it, and looking forward to doing that here, hopefully on Thursday. Thursday is where I'm aiming for, yeah, so I have some information that's being gathered here for it. I want to have all the facts in front of me with it. I know the direction it's going to go, but I want to make sure all the little details are spot on. So Michelle and Jason are helping to pull those together here for me. Okay. All right. So anyway, that's challenge, and that's it as far as the automation test. Going to close the test here today, and what you will see is a spreadsheet similar to this when we start the live challenge. That will have a lot of the information on here, a lot of the stuff here with it, and an expanded question and answer section, a few small tweaks, a few small changes here. But, instead of test purpose and outline, it'll have, the execution steps here to it. So that will be coming out, and that will be shared here with you. Okay. All right. Now, market. We had a couple earnings. Google was the most notable after the bell yesterday, right? And the stock dropped big. And you look at the earnings, beat, Google just, hey, it's Google. It beats on earnings, right? Revenue, missed. Stock's having its worst day in a long, long time. In fact, I'm pretty sure it's going to hit a record in terms of worst day for Google in a long time. Yesterday, we saw the stock get bought, and today just collapsing. Giving up over $100 a share here on the stock price, and so just a huge move for Google, and one that if we back this out to a monthly, it doesn't look all that dramatic, right? It doesn't look horribly dramatic. I think this might be one of the worst percentage day for Google since back here in 2008 when I had a vertical put spread on Google ahead of its earnings. And if you've ever traded those vertical put spreads, you're getting paid to get into it, but you need the stock to close above the level that you sell. And Google gapped right down to the level that I sold. And it was one of those where if it were to keep going down, ouch, it'd be very painful. If it stops, it's all the gain is there, and had to wait it out the entirety of the day. And wow, was sweating quite a bit. Ultimately, it paid off. I have never done a vertical spread on Google since, but I think this is the worst day percentage-wise that Google will have since that time back here in 2008. It's been a monster story for Google. It's they still have a lot of the positives, but there are some regulation concerns that come in, and let's face it, it's a high valuation stock, and you have a high valuation stock missing on revenue, to go down 8%. That's not exactly abnormal for what we expect and what we have seen in this market. But here's the revenue trend on what Google has been. It still has a better revenue trend than the market. It's still growing revenue better than the market. In fact, if you look at Google revenue growth quarter over quarter, right? Last year this time, revenue down here about 25 billion, and up here came in at 29 billion this year. So a better growth rate in terms of revenue than the overall market. So it's not a terrible number. In fact, 19% is the growth rate on the revenue, but you can see the revenue growth rate in the direction it's going. Right, it's going the wrong way here, and that's one of the reasons why they are selling it here today. We also saw General Motors come in with their earnings here this morning, and if we come into earnings per share, they beat by a large margin. Right, they beat by a pretty large margin here. If you look at it year over year, last year at this time was $1.43. This year $1.41. But you see the revenue miss. Right, and this is why GM's down. They missed on revenue. Right, they missed on revenue. Year over year revenue growth minus 3%. That's just not good enough to get investors to be buyers. All right, if we compare that to Ford and what Ford's earnings were, on the earnings, they beat on the earnings nicely. Big kind of blowout beat there. And if you look at the revenue, they beat on revenue. But you can see Ford minus 5% year over year. So year over year, GM's a little bit better than Ford, but tells you a lot about expectations, right? And, this kind of beat or miss element the bottom line, there's not a whole lot to get excited about in the auto industry for what's going on and what's happening. Could that change a little bit with some trade deals? It could, but just not a lot to get investors excited. It's still a super dirt cheap story. You come into these names, you come in, you look at GM or you look at Ford, and you just come in and look at the valuations. They're very cheap. So something like a price to book here on on GM, it's only trading at 1.4 times book. For a big company like GM, that's really cheap. If you come into something like a price to sales, here on GM, let's pull that up. You can see price to sales here. It's 0.38. That's not expensive at all when it comes down to it. And it's one of those where, if they just bump the price to sales up to 0.5, the stock's going to move up 20%, right? You come to price to earnings, so a PE ratio, whichever metric you want to kind of come in and put in here on them, they're cheap. The PE ratio is a 7. It's a 7. You can't find a lot of stocks out there in the market that are like that. Why are they trading so cheap? Well, this chart is exactly why. The revenue. This isn't exactly Google revenue growth. This isn't exactly, it's not exactly what we're seeing out of Adobe or what we're even seeing out of a Honeywell or what we're seeing out of a Caterpillar. It's, it's just year after year after year of this just dragging on revenue, not being able to grow on revenue, so helping or pushing the stock down here today. Now, last but not least, General Electric. Now, General Electric saw a little bit of short squeeze going into the earnings here, and popped up here from 9 up into above 10 here. This is one where the J.P. Morgan analyst, has come back and roared bearish here with General Electric. Right here made the bearish call. Back here, he said, "Hey, you know what? Probably overextended. The story is maybe, not as bad as it seemed." Went neutral on it. The stock rallied, came out with this grisly commentary back here saying the stock is, basically going back to 6. And, it gapped down on that, but we haven't seen the continuation of the sellers really come in here to it. And I'm trying to pull up his comments here. I thought I saw something that he commented this morning. I don't have a position, so I wasn't watching it too closely. Let's see here. General Electric. Yeah, my apologies. He has not commented yet from what I see here. But anyway, it's one where, results on GE slightly better than expected. If we pull up, GE, expectations are not high when it comes to this stock, but you can see they beat on earnings. That's a little bit of a victory. Year over year, earnings are still down to 12% decline, right, in earnings. Revenue, they beat slightly on revenue, but 5% decline year over year. So, it's still in this decline phase, but I think one of the things you can take out of, a slight beat is this question of, hey, you know what? Are there actual improvements happening in the company that are going to turn into small gains in the future? Because right now the stock is priced for big downside, is priced for for the company to continue to erode. The market has heard about the turnaround story now for many, many, many years. It's grown weary, grown tired of it, doesn't believe it. Are there signs there's going to be a turnaround story? I think the fact that you see it gap up is the market saying, you know what, we're a little bit worried about that. We're a little bit nervous about that. And it's a company, it's a $20 stock if there's a turnaround story. But I'll go through it a little bit more here today. But anyway, that's another one of the big earners that came out here today. Big headline after the bell today is going to be Apple. They will be reporting earnings after the bell, and will definitely move the market. So they're going to be game changing for the markets. probably not, but they will definitely create some action. I talked about Alcoa yesterday. And, we saw Alcoa move on up a little bit this morning, is giving up those gains, is heading for this breakdown. It's a pretty ugly story here for Alcoa. You can see Arconic, which is gapped up here a little bit this morning. And you see the divergence. Arconic has just continued to push on higher. Alcoa, continuing to break on down. And, that's a huge divergence that's happening between these two. And, a small positive from Arconic today, not enough to push Alcoa higher. I think that just kind of confirms the eventual breakdown that we will see in that stock. Okay. Alrighty. Thanks for hopping on. Have yourselves a great one, and we'll talk to you later. Take care.